The Bank of Korea took another pause in rate hikes, keeping rates unchanged at 3.5% amid a cooldown in consumer prices and concerns over economic contraction. Our finance correspondent Lee Rae-hyun has more.
The Bank of Korea has frozen its key interest rate for the fourth consecutive time. The central bank announced a decision following Thursday's Monetary Policy Committee meeting. With the rate freeze, the figure stays at 3.5%.
Inflation is expected to remain above the target level, and we still need to monitor the monetary policies of major countries and the household debt situation too. The Board of Governors voted unanimously to maintain the current tightening stance.
The BOK began raising the base rate in August 2021 when it decided to normalize the rate, which had been significantly lower due to COVID-19. But the base rate has remained at 3.5% since February. Concerns over the economy were the major factor behind the BOK's decision. However, it's still uncertain whether South Korea's economy will see a rebound in the second half of this year as the country awaits recovery in exports and domestic consumption. The Finance Ministry earlier this month lowered this year's economic growth outlook from 1.6 to 1.4%. The Bank of Korea also lowered its forecast to 1.4% amid sluggish recovery for the IT sector and the underwhelming impact of China's post-COVID reopening. The reason concerns over record-high delinquency rates against loans with the Korea Federation of Community Credit Cooperatives is another factor behind the decision. The cooperative has been struggling with liquidity woes and bank runs due to the soaring loan defaults, which are causing anxiety in the financial market. The country is also seeing a slowing trend of consumer price rises, with the inflation rate last month dropping to the 2% range for the first time in almost 2 years. Meanwhile, following the BOK's decision to hold the rate, the interest rate difference between South Korea and the U.S. stays at 1.75 percentage points. But as widely expected in the market, if the U.S. Fed decides to take a so-called baby step, raising its rates by 25 basis points, the rate difference would widen to 2 percentage points, a record-high figure. This unprecedented rate gap means tough times ahead with heavy pressure on foreign capital outflow and a weakening won against the U.S. dollar. Lee Rae-hyun, 아리랑뉴스.